Hey, welcome to meeting my free webinar on how to trade training simply with Forex. And this is a continuation. So what I'm going to do is I'm going to pull up my screen and let you see what's going on. And I'm excited to show you this. Yesterday, this trade, New Zealand USD, was a negative $25.05, and the market closed at 5 p.m. It came down a total of almost 500 pips, and a pip with this is 0.01 per, and it basically came down almost $5. I can't complain. The market is closed, like I recently stated, and it closes every Friday from 5 p.m. Eastern and is closed and opens back up on Sunday at 5 p.m. Eastern. This is regular currency or foreign exchange currency. Now, if you try to do Ripple or Bitcoin or any cryptocurrency, that market doesn't close. And all the other commodities, I'm not completely sure, but I don't think they close either. I think that's wrong. Cryptocurrency is the only one that stays open. Other commodities and foreign currency, which is foreign exchange in IML, closes from 5 p.m. Friday Eastern to Sunday p.m. Eastern, just to give us a little bit of a break. And if you can look, when my trade first went in, it was at a 0.68310. That's the entry price I had. People ask me, how do you find the entry price? Well, that's where IML TV and Stevenson Lindor, as well as Orrin Wright, come in handy. They are instructors with IML Academy / IML TV, and they give all kinds of hints and trades, as well as our swipe trade that we have through IML that gives us an idea of where to put our trade. And I've been with this specific one since June 25th, I do believe. So it's been a while. And the reason I'm still in it is because it has changed. It has changed wonderfully. This is our day chart. We have different charts for different time frames. My entry point still remains the 0.68310 at a 0.01% lot size. That means that regardless of where this trade goes, up, down, or consolidation, which is straight across, I don't lose much. My stop loss, I did change it. As soon as it got to the $20 mark, being negative $20, my stop loss moved back to 4,000 pips. That is awesome. Now, I was going to change my take profit as soon as the market opens back up on Sunday. So my take profit is currently still at 5,000 pips. And it's being that the market closed, it's not going to hurt me with the one-on-one ratio. Same amount stop loss, same amount take profit. However, as soon as that profit went close to my 2,000 initial stop loss, that's when I moved it to the 4,000. There's always a time to change if need be. And as soon as this baby goes into profit, I can actually move the stop loss above my entry price. That way, if it goes back down, I won't lose anything. It's a risk-free trade. It's ideal. It works perfectly. At this time, being that the market is closed, there's not a whole lot we can do here. That's why I keep it the way it is. My stop loss at $4,000 or $40. My take profit is still at 5,000 or 5,000 pips or $50. The reason it is 5,000 pips is because if you look down here, my size is a 0.01. That makes it so everything stays in a reasonable manner where I'm not over leveraging. My margin level is, as you can see, 26.54%. And it's ideal for me, for my comfort level, to be around 500 to 800% minimum. So if I were going to put in another price entry place, the only problem with that is it would change the margin level. And with Forex.com, they have a first in, first out rule. So if I were to put in, say, another buy at a higher entry or a different entry price point, this price, this level would have to go above my first initial before I could let it go, before I could get it out. And the second one would have to wait until the first one has actually made profit. It's not always a good thing. I learned this from get-go. And it's not always in the guidelines. So pay attention to your brokers. Really pay close attention. And if you can see how the trade is running here, I was way below my stop loss. I'm sorry, that my stop loss was way below the pattern of the trade. So whenever it decided to go down, I was still way below it. It wasn't an issue. And my take profit is right in line on the day chart of what this trade normally does. And it is definitely turning around. So I was right. And it feels good to be able to see what something happens, to be able to trade right, but look left. It's the only way that you're actually going to be able to understand these trades, the patterns they have, without any indicators. No indicators means it's a naked chart. And it means it's easier for most people to learn how to do so on an ongoing basis. In my situation, with my health issues, I have a tendency to forget everything while I sleep. So I have no memory of anything the next day. And learning how to do all the indicators and all the signs and all the rest of it that goes along with these charts is extremely difficult for me. Doing it this way actually shows a beginner how to set their trade, set their stop loss, set their take profit, and adjust accordingly. To know where to put your entry point, to know where to move your stop loss if you're going to move it, or even your take profit if you're going to adjust it. It all depends on you. Now I'm going to stop my screen share and see if there's any questions for anyone. Going once, going twice, and gone. Thank you for joining me, and I'll see you tomorrow. Tomorrow is at 2 p.m. Eastern. But in the meantime, have a great night and a fantastic weekend. Bye-bye.